Okay, good morning, guys. Excuse me. So just let me know if you can hear me loud and clear. There's a new YouTube streaming source, or whatever you want to call it, and it's just popped up. I forgot that it was changing over, so I'm pretty sure I've got everything organised, and it's coming through. Just let me know if you can't hear me. Well, if you can't hear me, you won't be able to know I'm saying this, but I'm pretty sure it's all good. Let me just write a message. Ah, fantastic. Clear as daylight. Love it. All right, welcome, guys. Let's get into it then. So we've got, we'll just go over the overnight action. It looks like the bulls are back out to play. They look quite intent, especially on the NASDAQ, to really push it higher. I think at this stage, there's nowhere else to go. I mean, you just got to keep the ball rolling. Things could be dislocated completely from fundamentals, the markets, but it's irrelevant if what's 100% guaranteed is they want to trade. Okay, they want to be in the market, and if there's nowhere to go, you're just going to keep pushing the same thing. If it is happen to be the Nasdaq and there's a big bubble in tech, then so be it. They'll get a bigger bubble until something else, triggers a sell-off or profit taking or something like that. But at the stage, it doesn't seem to be the coronavirus. They seem to be not too concerned about that. Jobless claims are not going too far. We had good industrial, well, not good, but better than expected industrial figures. And I think that's why, or manufacturing, last night, pretty much in the globe, in Europe, in Asia, in China, and in Europe, and I said that already, US. So that buoyed the bulls, supported the bulls. And just gave the market a good nudge. So the US dollar was going up again right up until the very minute the US opened, and then it got sold off. So they look like they want to keep it down. US dollar down, keep that ball ticking along. A weaker US dollar, obviously, better for their exports. And there's no real need at this stage until the US potentially look to raise rates, but they're not at all. The real rates are actually going below -1. So it looks like there's no chance for a long time yet that the US will be raising rates. So that's easy money or cheap money is going to continue to flow. They've got stimulus, which they're arguing about at the moment. It looks like not the Democrats, the Republicans, may be a bit adverse to adding more debt, spending more money. I mean, sooner or later they're going to start thinking about that, but it seems to be they're happy with putting out more stimulus, which the market's just sort of sitting around waiting for at this stage. So we'll see how they go. Now, this is the US, so the market's pumped up. We've got a level. This is just a pre-market plan that we send out in the morning of the index trading, or intraday trading at least. So we're looking at this rally up here. The MAs are sticking. The longer-term MAs, I think it's the 150. It's just sitting on top of the MA now, so we could easily get a bit of chop around here and then punch through that 26,705. If that's the case, you want to see it push through, pull back, hold a higher level to go long. Otherwise, it could push through, wash them out, and hold a lower high. All right, so it is a level that it's just toying with at the moment. Let's just see how far it goes back. It's off the 30-minute chart, so there'll be a level way back here somewhere. Anyway, put the 5-minute charts up. So that's the two levels, and on the downside, we'd be looking more at something like 26,630 on the downside. See if that can, if it chops around and starts holding below this longer-term MA, as it looks like it could potentially flatten out quite easily. And remember, this is only a 5-minute chart. We might get that flattening out and then roll. If it rolls, pops through there, we want to see a bit of a grind up, hold a lower high for a selling opportunity. And whether that's soon, come into the open of the Hang Seng, which is 11:15, or whether that's later on into the open of the Europe. So Europe bounced back really hard. The DAX has been down, well, not so much Europe as such, but the DAX did. It was up 300 something points. It's been down 400 and then nearly 500 points in the last couple of sessions. So they bounced in the back of their positive, Germany's positive manufacturing data. Really bounced hard, so everyone was chasing their tail on the way up. Let's just go over the SPY is going to open. That's really well and truly extended, expecting to open up on the ASX about 70 to 80 points, I think. So whether or not we do, coming into the open, the SPY flushes lower, just to squeeze out some of these longs that have built up overnight, squeeze out and see if we can hold a higher level. I think there could be a bit of euphoria on the open, because everyone will be sitting there around going, okay, the bull market's not over. We've been told 100 times that it's over. It's not over yet. And we could bounce in the open and then drift lower into the close. Who knows at the moment? We just want to see where it actually opens. So the key level on the downside, 59.60, if we flush that, then we'll just be looking to see if that weakness can continue. But to continue, if it flushes a level and then we do this kind of action, then I'll be looking for more weakness longer, like into the close. I'll be looking for a key lower high. But if it sort of just does this, flushes down and then starts to grind the way back up, it's going to be a tough gig to get long. But you want to see, you don't necessarily see it slam through and then grind up. If it slams through on heavy selling and then grinds back up, that's not really heavy buying into the market, and the selling's still there. So that selling could continue and drift, really start to push that market lower, because it is getting extended up into that 6,000 zone on the SPY anyway. So we'll see on the ASX, see how it all plays out in the open. Now the Hang Seng, to me, the Hang Seng's looking weaker. Okay, we're at a level at 24,595. You can see that market sort of popping up and drifting lower. So if it holds this MA, the longer term MA, which would suggest it's not much action on the upside, we'll be looking for a lower high for a push through 24,460 potentially, down to this key support at 24,140, 24,140 that is. So again, we're just looking for that shoulder, that lower high, to put the squeeze on some of these buys that built up overnight and through the European session. But as opposed to, say, the DAX and the Dow, they didn't look too bullish longer term. So the N225, that's bullish. You can see it's holding this longer term MA out, and they had some good numbers out yesterday, which triggered this buying on the index. It was about, I think it was about 10 o'clock, 10:30 thereabouts. It triggered that buying yesterday. So I was looking for a bit of a selling opportunity, and it just went pop, pop, took straight off. So we'll see if that can stick on these MAs. It may need to flush out some of these lows, flush, and then if it can hold an inside higher low, then it could be a buying opportunity for a lift up to, was it 22,550 thereabouts. All right, let's get over to the key markets at the moment. You can see the S&P opened strong after a good European session. The Dow futures drifted higher, opened strong, but pretty much went sideways after that. And that again was thanks to the NASDAQ. NASDAQ strengthened those tech stocks. Now I think it traded into new highs. I'm not 100% sure. Yeah, it traded into new all-time highs, but it's just smack right on that high from previously. So we'll have to see if that starts to hold below these MAs and we get a bit of profit taking and a drift lower, and we could from there just build. There's no reason why you can't sort of, let's just get that up. That's not working. There we go. Drift lower, and then start to buy that level and hold an inside level and start to drift back up again. Okay, but sooner or later there's going to be up at these highs. I think there's going to be sort of these waves of profit taking, a bit of a pullback, see if they can buy into it again, because again, it is the only thing that's really at the bottom indicators the CCI and the MACD. So they're the two I'm using at the moment. Lawrence, sorry mate, missed that. CCI is set at about 30, and the MACD's, I think it's just stock standard. But it's just your momentum. Just trying to judge momentum really by these MACD and see when it's extended roughly. Doesn't really matter about extensions when you're looking at if it's overbought here when it's a trending up. So it's kind of it's interesting. I'm getting more into using those two anyway. This is MACD. I really like using that now. Excuse me. So yeah, if we can see something like that, like I was saying, it's could be a lot of. It's the only place to put risk on at the moment, and if there's money that has to flow into the equity market, then chances are it's going to go straight into tech, because they're weathering the storm, or the coronavirus storm at the moment, quite well. So look at the XJO. We'll just quickly look at that before it opens. That's it's getting weighty, but I think the key level for me is more down here. The market can play around, chop around here, and if it's going to hold up, then it's got resistance up at this zone. So that could be just sideways consolidation. It's just got through this area at around, was it 59.20, got through there yesterday and sort of bounced back in there. We may see that the selling continues down to this zone, gets rejected. But ideally, if I'm going to be really bearish in the market for a good move, solid move down to see that volatility really start to spike, this ASX is probably going to jam through that level and see if it can back and fill, and then get a key lower high to work off. If it just sort of bounces around here and rallies back up, it's just really range bound action, and it's going to be choppy, and it's going to keep people caught on and off all the time, in and out. Sorry. Over to the other markets. We'll just look at I'm going to look at cryptos for a second, because I think big sell off in Bitcoin as we got up into those highs. So at the moment, it's pretty much an each way bet whether we're going to jam higher or drift lower. And it looks like we could just get a bit of sideways action, but I think longer term it needs to settle in and really settle in and hold these highs basically above this level, 10,500. If you can hold above 10,500, it needs to do some work, and then we can get some sort of higher low to work off. There could be another trade long on this one. But at the moment, I was happy to take that, and when we did get stopped out on that, happy to take the gains. Missed out on a bit, admittedly, but this thing could move easily straight back down again and come back down and below the range and then reset. So you want to see it reset, especially after that red candle there over the weekend, really knocking out a few of those late longs. Ethereum looking good. The same thing. That big spike lower really, took out a lot of these longs from basically right down here at 317. Swept them all out. If they're holding, great. I mean, they're grinding back up again. You're getting back in the positive territory. It's holding the MAs, but that price action to me is not bullish as opposed to this. So you want to see a good move up, consolidate the top third, good move up, consolidate the top third. When you sort of pop up, retrace a bit, like this little leg here, and retrace straight back down again, that's not bullish. So we have to just see if it can reset itself. Now over to the others, we've got crude oil and copper. And then we'll look at the US dollar in a second. Now, we were looking at this yesterday. We spoke about this, and to me, it looked like there could be some selling action off that level, and we're looking for a short in here potentially. I didn't want to commit to the short purely because, it was so early in the Asian session, and that there's a good chance that we'll get in short and then turn around and smashed out, which is exactly what happened. Right, so I'd rather see the fact that that was such an obvious level, and this you've got to take into account moves like this. Okay, that sort of spike lower, big spike lower, especially the speed and the savagery, I guess you can say, that it happened. If you want out of your shorts, you're out there. So if that's the case, there's no real shorts to squeeze out, which means that the market's probably going to reset. Spikes back up, you might get some shorts back in here, and then to work its way back down again to see how we go. But that there really cleaning out a lot of these shorts that might have built up. Sorry, cleaning out some of these longs that built up here. I've been saying shorts, but cleaning out some of these longs. They've re-established themselves and it's lifted back up. So there might be a chance that we can hold a lower high up here, chop around a bit, and then squeeze out some of those longs again. But at the moment, it's about supply and demand. And every time good manufacturing data, anticipate we're going to soak up all that supply, that extra supply. Now, if things pause again because of coronavirus and we go back into lockdown and the numbers keep increasing, then supply is going to be back on the cards and prices will push down. All right, that and the US dollar, which fought back from a bit of a sell-off, a bit of a rally, so back in the negative territory. Copper, look at the way that bounced back. So that was pretty much all down one session, all back up the next. And that's, again, it's all based around supply and demand. If the economy is opening back up, then there's going to be demand, a lift in demand. But that, you've got to remember how much is going to be factored into these markets, how much is factored into that massive rally back off those lows, back to above where it started before the sell-off. It's come right back again. So how much is actually factored in? That's why I'm not keen on going low. I want to see long. I want to see a bigger clean out of these longs, these buys all the way up here. I mean, we've barely touched it. Anyone that's sort of long below that zone there has really not been put under pressure. All right, so you've got some late longs that are getting chopped around, and people trying to go long getting chopped around. That's fine, but anyone that's established a position nice and early has not been put under pressure yet. So you don't always, when you break an uptrend, you don't always come back. You can consolidate sideways, and that's a good show of strength. So if we continue to consolidate sideways, then I'll be looking for a key high low to work off some longs. But for now, it doesn't look like it wants to go long. It's just choppy, and I don't want to sit there, go long or short, and getting caught in the chop. You go short here, you got caught in that bounce. So either way, the market looks to be just waiting, biding its time, and waiting for the overall market to pick a direction to see if we do get a pullback in the equities. But at this stage, they look, the US looks happy to just keep lobbing into the NASDAQ and keep buoying those indices, and we're just still waiting for that stimulus package to come through in the US. All right, that's probably about all I want to go over. Sorry, dollar. Let me just have a quick look at the dollar. Markets pushed down. You saw that big sell-off, and that was into that zone. We're talking about 92.50, bounced. You got a bit of a bounce in the European session last night, and then that was pretty much 11.30. Look at that, straight down. So they come straight in 11.30 and started selling, straight back down again. But it was up slightly for the session. It's whether it can hold these MAs. But there is a lot on the US dollar also, even though there's no reason to hold. That's why it sold off, because the interest rates are so low for so long. You got to realize how much further can interest rates be cut. Well, they can't. They don't. They've said that they want to go negative territory, so it could start to make buying the US dollar down at these levels more attractive, because everyone's loaded short. This is not. We are not in the unknown in the US dollar. We know that it's moving down. Okay, so if you're not short, you're out, essentially. Potentially looking for a long. If you're looking for a short now, you're late to the party, and you're going to be the fodder to get chopped up. I'll get onto the I'll look at PLS in a minute, Lauren, and I'll put it onto Discord. Have a look at it, yeah. So yeah, we'll see how that goes. But if it does start to base here and we start to get a deeper correction, I still think it's going to be sort of fear-based. If the equities start melting down, there's going to be that dive into the safe haven US dollar, potentially squeeze out some of those shorts and they have to cover lock away gains, and they get this big spike in the US dollar. Then everything reverses. The Aussie, the euro, currencies linked to the US dollar, gold, all that sort of stuff could have a bit of a reversal. But we'll see how that all plays out. All right, I'll finish up there, guys. Trying to keep it short and sweet, but keep going over the 15 minutes. But anyway, hope you enjoyed that. Thanks very much. We'll be back in tomorrow at 9:40. But just remember, if you've got any questions, feel free to send us an email to support@tradesetup.com.au. And remember to take a look at our website. Jump on there and leave us a like if you can. Also, there's one other thing. I'm going to be doing a talk. I'll get some details for you. It'll be an online thing. There's an online someone that does like a TV type of thing. And they have a fundamentalist and a technical analyst. And as you know, I'll probably be the technical analyst, not the fundamental guy. But I'll be jumping online. I think it's in the coming weeks. So I'll give you the details of that to tune in and start following him. I think it's some pretty useful information on there that he puts up. So anyway, guys, thanks for joining, and we'll speak to you soon. Bye.